Good day, Junior Tickies. I'm Mrs. Brimacombe, and we are going to focus now on adjustments where we're specifically looking at provision for bad debts. Provision for bad debts is a negative asset. What is provision for bad debts? We're making provision for any outstanding debt. So we need to be conservative. We apply prudence, which is the GARP principle. Now, provision for bad debts can either be, if we need to increase it, it can be an expense, or if we need to decrease it, it can be an income. So what happens if it increases? If it increases, it means that my provision for bad debts will be credited, and therefore my assets is going to decrease. Provision for bad debts is an expense which will be debited. If it's debited, it will have a negative effect on my owner's equity. Before I continue, provision for bad debts is a negative asset. It's subtracted from your trade debtors in note number 5, trade and other receivables. So when we look at if provision for bad debts is adjusted and it needs to decrease, it means that my provision for bad debts will be debited. Therefore, my assets will increase. Provision for bad debts adjustment is now an income and will have a positive effect on the owner's equity. Looking at activity 11, show the effect on the accounting equation and indicate how will it appear in your financial statements. So provision for bad debts must increase by 600. So they told you we need to increase it by 600. Therefore, provision for bad debts adjustment is an expense. We start with the provision for bad debts. The balance brought down is 1,750. It increased by 600, so provision for bad debts adjustment is going to be debited. My new total for provision for bad debts is now 2,350. On the accounting equation, assets minus 600, owner's equity minus 600. In my financial statements, provision for bad debts is in my trade and other receivables and will be subtracted from the trade debtors. So if I were to complete this in my balance sheet, I would have the debtors control 75,000 minus 2,350. In my income statement, provision for bad debts adjustment is going to be 600, and this will form part of your operating expenses. Now that was an easy activity just to ease into it and to make sure you understand. Now we're going to look at if there is a number of things that's happening, changes that needs to be made. Adjustment number A, a credit note was issued on 28 February 2021 for 6,000. Goods were sold with a markup of 60%. No entry was made for this transaction. So to show the return by the credit customer, it means we need to open up debtors allowances, debtors control to show the selling price. They provided me with the selling price 6,000. So debtors allowances is going to be debited with 6,000. And the debtors control is going to be credited with 6,000. To show the cost, I need to open up trading stock and cost of sales. Trading stock is going to be debited, but now we need to work out the cost. So we have to take 6,000 times 100 divided by 160. My cost of sales is going to be credited with the same amount, 3,750. To show the effect on the accounting equation, first the selling price, assets minus 6,000, owner's equity minus 6,000. To show the cost, assets plus owner's equity plus 3,750. Adjustment B, Bad debts of 4,520 must be written off. The provision for bad debts must be adjusted to 5% of the book debt. What is my book debt? It's my new updated balance in the debtors control. So we first need to make all the adjustments before we can do the provision for bad debts. So to show the bad debts, debtors control will be credited with 4,520 and bad debts is going to be debited with 4,520. Effect on the accounting equation: assets minus 4,520, owner's equity minus 4,520. Now we can calculate the provision for bad debts. Our new debtors control balance is 269,760. And now we can times it by 5%. So provision for bad debts, the balance brought down from the pre-adjustment trial balance is 15,000. My new balance should be 13,488. Remember, this was calculated on your book date, which is your updated debtors control balance. This means provision for bad debts must decrease. As soon as it decreases, it's an income, the provision for bad debts adjustment. So provision for bad debts is debited with 1,512 and provision for bad debts adjustment is credited with 1,512. Effect on the accounting equation: assets plus, owner's equity plus. To complete what will appear in our financial statements, debtors allowances is always closed off to the sales account. So in my income statement, I'm going to have sales from the pre-adjustment trial balance 360,000 minus 6,000. Debtors control and provision for bad debts will appear in your balance sheet. Trade and other receivables, trade debtors is 269,760 minus the provision for bad debts 13,488, and that will now reflect your net trade debtors, which will appear on the face of your balance sheet. This is now assuming that there were no other adjustments with regards to trade and other receivables. If we look at trading stock, in my balance sheet, inventories will be 167,750. Cost of sales will appear in my income statement. Cost of sales is closed off to the trading account. On my income statement, I would have had cost of sales in brackets 162,000 minus 3,750, and that equals 158,250. This would have been my total expense. So if we take our sales minus the cost of sales, that would have indicated to us our gross profit. We're not going to calculate it now. It's just to give you an example of how it will appear in your income statement. Bad debt will be in my income statement. It's an operating expense, 13,970. Thank you very much. I want to leave you with this quote: study hard, no matter if it seems impossible, no matter if it takes time, no matter if you have to up all night. Just remember that the feeling of success is the best thing in the entire world. In our next activity, we are going to focus on transferring of debtors and creditors balances, and this is applicable in the balance sheet. I hope you have a wonderful day.